Hello, welcome once again. This is Si Wing Yi from the University Network, and welcome to another episode of Realistic Market. And this time is a very good timing. As of today, dated December 13th, 2022, as you can see, NAR, which is National Association of Realtors, over here, National Association of Realtors forecast 4.78 million existing home sales and stable prices in 2023. They are also going to talk about the NAR going to talk about the top 10 realistic market to watch for next year, 2023. So once again, over the past couple of weeks, you have seen me review the 2023 realistic forecast by various credible organizations such as Redfin, Realtor.com, Zillow, and on and on and on. And today, I'm going to talk about the forecast by NAR, National Association of Realtors. And without further ado, let's go over the information. Of course, once you conclude this video, if you see value on this video presentation, please smash the like button and subscribe to my YouTube channel so you can receive real-time, very relevant real estate information that could make you a very informed primary home buyer or informed real estate investor, which is my forte, my background. All right, so let's go further. NAR predicts 4.78 million existing home sales in 2023, but it'll be down 6.8% from 5.13 million in 2022. And they also said the annual median home prices are expected to increase by just 0.3%, which is no growth at all, which is fine. You know, this is not a crash or not a big appreciation either way. So it's sort of a reset of the market following a 9.6% appreciation gain nationwide in 2022. So, and here's the interesting specifics on this particular article. It mentioned Atlanta, Raleigh, Dallas, Fayetteville, Arkansas, and Greenville, South Carolina joined 5 other metros areas where NAR's top 10 housing markets in 2023. So Lawrence Young, many of you have heard of him throughout these past few years because he's the NAR chief economist and senior vice president of research. Forecast that 4.78 million existing homes will be sold. He also said prices will remain stable. Atlanta will be the top real estate market to watch in 2023 and beyond. Young unveiled the association forecast today, December 13th, during NAR's 4th annual year-end real estate forecast summit that just concluded. So Young predicted the home sale will decline by 6.8% compared to 2022, and the median home price will reach $385K, an increase of less than 1%, 0.3% from this year to $384,500. So half of the country may experience small price gains, while the other half may see slight price declines, Young said. However, markets in California may be the exception. With San Francisco, by the way, that's where I live for the past 4 decades. So I understand about the volatility of the real estate market in California and specifically San Francisco Bay Area. For example, San Francisco, for example, likely to register price drops of 10 to 15% throughout the past 6 months and moving forward, at least for the second quarter of 2023, we may see that with San Francisco Bay Area, not just the city of San Francisco. There are many counties in the Bay Area above and beyond San Francisco, which is San Jose, the East Bay, the Tri-Valley, and the smaller sub-markets, around 50 to 100 miles in going over different directions in the Bay Area. So anyway, just so you know, Jung expects rent prices to rise 5% in 2023. If you notice, the expectation of rent prices normally pretty much coincide with the inflation rate. If the inflation is higher, the rental rates will increase. If the inflation rates decreases, the rent decrease, right? So you heard my other videos. I explain quite often about this phenomenon. Following a 7% rental increase occur in 2022, expect the rent continue to rise to 5% in 2023, he predicts. Jung also predicts the foreclosure rates will remain at historical low levels in 2023, comprising less than 1% of all the mortgages. So in case some of you are thinking, oh, the market's going to crash, we can have a whole bunch of foreclosures. Well, that clearly is not happening, and I'm not going to spend time on this video to talk about it because my other videos I talk about it. So at the end of the day, I definitely agree. Many homeowners have substantial amount of equity in their homes, and very few people under stress to sell. So therefore, the foreclosure level is at a historical low. All right? So nothing more I need to say about that, right? So for some of you, many of you, whatever, whoever you are, thinking that you can get a lot of foreclosure deals in the upcoming times, well, you're going to be sorely disappointed. All right, so let's continue with the article here. And let me see what else. Here's some very, very important. This article is really have a lot of good data, very, very relevant data that we need to know as we're head into the 2023 next year. Then next year, wow, it's gonna be a bumpy ride. It'll be a very interesting going, especially the first quarter of 2023 is very, very interesting. I just can't wait about a whole bunch of things gonna happen. So just prepare for the bumpy ride for 2023. Yum forecast, let's continue. Yum forecast, the U.S. Gross domestic product will grow by 1.3%, roughly half the typical historical pace of 2.5. Not bad. After eclipsing 7% in late 2022. He expects the 30-year fixed rate mortgage to settle at 5.7%. This is very interesting as the Fed slows the pace of rate hikes to control inflation. You noted that this is lower than the pre-pandemic historical rate of 8%. So 5.7%, I take it. I take it any time of the week and twice on Sunday. Anytime the 30-year fixed rate mortgage is less than 6%, knowing what has transpired through this past year or the past couple of years, anything, a mortgage rate on mid-fives, I accept that. And I feel if this were to happen in 2023 with this mid-5 interest rate, I think the housing market is gonna be a very healthy market, and the activity is gonna pick up, the sales is gonna pick up, and more homeowners will be open to sell their homes, which most homeowners right now, as you may know, a very large percentage will be open to selling their homes because right now they are locked in their low historical rate mortgage. So that's what's happening. All right, let's continue. 5.7. Well, that's really good. if that would happen. I would prefer lower. I would prefer 5.5 or 5.3 or maybe even 5%. If it is 5% mortgage rate, I believe there'll be a housing frenzy in a good way that's going to occur. So but the trends are moving in the right direction, especially the inflation. If inflation continues to subside, the Fed will going to lower their interest rate to at least the mid fives. Anyway, here's a good thing. The next category of discussion in this article is the top 10 real estate markets for watch in 2023 and into the future, according to National Association of Realtors, NAR. Here it is. By the way, a lot of these markets I personally have experienced because over the past 2 decades, my organization and myself, we have guided our hundreds and hundreds of real estate investors, many of them from California, to buy out-of-state cash flow investment homes, single-family homes in many of these markets, and even more markets as we speak. So, yeah. So here are the top 10 markets which NAR identify that will outperform other markets. So this is juicy stuff, don't you think? Yes. Leave me a comment. We have many teams on the ground over the years that help out-of-state investors to buy single-family homes in these markets from time to time over the years. So we have a trusted team in many of these locations that help investors to achieve turnkey cash flow single-family home. Many of them are new construction homes. Great buy in the whole type of strategy. So the top 10 markets are Atlanta, Georgia. Yes, as you can tell, most of them are located in the Sun Belt, South and Southeast. Wow. Atlanta, Georgia, Raleigh, North Carolina, Dallas, Fort Worth, Texas, Fayetteville, Arkansas, Greenville, South Carolina, Charleston, South Carolina, Huntsville, Alabama, Jacksonville, Florida, San Antonio, Texas, and Knoxville, Tennessee. By the way, for over the years, currently we have turnkey teams available to help investors that are connected to my organization in Raleigh, North Carolina, in Dallas, in Huntsville, Alabama, Jacksonville, Florida, San Antonio, and Knoxville, Tennessee. So out of the top 10, slightly more than half of these top 10 markets, we have a referral relationship with those teams in these areas that can help our investors to purchase single-family homes, rentals, buy and hold long term. Okay, wow. See, I'm ahead of the game. I know where to target and buy in the markets that have a lot of future growth. And the demand for housing continues to outpace supply, Jung said. That's very, very clear. I know some of you are thinking the opposite. The demand for homes, even as we speak, has outstripped supply. When demand exceeds supply, housing prices will increase. Jung said, economic conditions in place for the top U.S. markets, all of which are located in the South and Southeast, provide the support for home prices to climb by at least 5%. He predict at least 5% appreciation growth rate in these top 10 markets in the South and Southeast. Perfect for mom and pop real estate investors. NAR selected the top 10 real estate markets to watch in 2023 based on how they compare to the national average on the following economic indicators. By the way, before I go over these top 10 indicators, this is the kind of indicators that I personally have used over several decades to help our investors to buy in different markets in the country over many, many years. And they are, according to this NAR article, among the top 10 metrics they use to identify why they believe these top 10 housing markets are the most desirable moving forward is number one, better housing affordability. Yes, lower prices compared to other metro markets in other part of the US, especially compare against the western region of the US or the northeastern region of the US. Low affordability and low cost of living, high growth. Number two, greater number of renters who can afford to buy a medium price home. Meanwhile, a lot of those renters cannot afford it right now. So they be your renters if you are a real estate investor or a landlord. So you can have a lot more renters be renting from you because of the 40-year low in home affordability as we speak. Number three, stronger job growth, right? It's all about job growth and population growth. Faster growth of information industry jobs, high tech, computer, the science jobs, so it's the Silicon Valley types of jobs, right? And number five, higher shares of information industry in the respective local CDPs, gross national product. Number six, migration gains. That's right. People are migrating from all over the country into the Sun Belt, South and Southeast, because of many of these places have no state income taxes, and job growth, population growth, migration patterns. People, as a result of remote work, a lot of these people can live anywhere they want. They rather go to places where it's nice and warm, tropical weather, and low cost of living, low cost of housing. At least for now, those housing costs are skyrocketing even as we speak in many areas of the South and Southeast, but nowhere near the high cost in California and Northeast. Number seven, shares of workers, teleworking, of course, remote work is here to stay. This is the new normal. Number eight, faster population growth is all about population growth and job growth, right? So that's the most important metrics. Number nine, faster growth of active housing inventory. And number 10, smaller housing shortages. Yep. Low supply of homes, high demand, faster growth of active housing inventory. Yeah, they have to build more homes to accommodate the influx of people moving into all this area. So this article really resonates with me personally because I've been preaching this type of belief system over the past several decades because I'm a real estate investor. I'm not a realtor. I don't sell specific homes in a specific city like many YouTubers out there. I look at the big picture. I'm not married to any specific market. I just help mom and pop real estate investors to buy in the low cost entry level homes that can match the rent that the renter is paying, so you can cash flow quite nicely. You can do a turnkey buy and hold. That's how you build wealth, by income properties, by single family homes in low cost entry level home prices market with job growth, population growth, Sun Belt, warm weather, good government support, good business climate, all those metrics, right? Population growth, job growth, migration, all those kind of things. So if you want to learn more about this kind of information, just subscribe to our newsletter at the bottom of this video and put down your email, subscribe to it, and you will receive monthly email newsletter to get some real-time practical information about real estate investing. So regardless of your experience level. And of course, if you will see the value of this video, please smash the like button and also please subscribe to my YouTube channel. And so you will get this kind of great content on a weekly basis. So with that said, thank you for attending. Have a nice day. This is Siwen Yi, and I will see you on the next video very, very shortly. Have a nice day. Goodbye.